Hey guys, it's Meg Smith-Johnson with Pollock Properties, powered by Keller Williams, and today I'm accompanied by Max Saldino with On Time Mortgage. And so with both of us being in the business of home ownership, so often the question comes up, should I buy or should I rent? And today we have a lot of great figures, and we're gonna dive deep into really giving you some clarity on what decision to make.
Right, yeah, and I'll start out by saying this is an incredibly nuanced topic. Everyone's got a very unique scenario and circumstance. So what we thought we would do is kind of walk through some of the major factors when going through this exercise and provide you all with a calculator to help, kind of plug and chug and make sure that the scenario is relevant to you.
Yeah, really big piece just to take into account right off the bat is comparing apples to apples. So if you're currently in a condo, let's say a 1-bed, 1-bath, we're not going to want to compare that to the mortgage on a 3-bedroom, 2.5-bath single family home, just because we're really going to want to make sure that those align, and that way those price structures make sense and that understanding is there as well.
Right, that's a good point. In addition to that, another major consideration is how long you're actually going to live in the specific property. So what we are going to provide you is a link to a study that was done by the National Association of Realtors, which goes over the average length of time individuals typically stay in their homes, depending on the geographic location that you're looking in.
And then another big piece to take into account is going to be appreciation of your purchase. So just on average, we're going to go off the 4% figure, where if we're looking at rentals, we're going to be looking at a rent increase of 4%. So in comparison, we're taking a plus to a minus there in that sense, just to give you comparables.
Yep. So this next topic, this would be on the rent side of the argument. So if you were to take the amount that you would put towards the down payment and closing costs, and instead of buying, actually invest those funds. So we took the figure of $22,000 for closing costs and down payment. So over a 7-year period, and assuming 8% returns of compounding interest, you would turn that $22,000 into about $38,000. So keep that in mind as we finish up this video here.
Yeah, just really big pieces. There also is going to be a lot of non-financial benefits. So you're going to have the ability to do those upgrades that you'd like to do for you and your family there. Also, a lot less chance of having those nosy neighbors and noisy neighbors as well in comparison to a rental there. And then another big piece is just going to be family stability there. You really have a lot less of a chance of getting kicked out due to that rent increases, etc. And a lot of those other factors that do play into rentals there.
Yep. All right. So to bring this all home, you're going to see a Excel portion that goes over all of the assumptions that we're going to suggest that you populate into this calculator. This is an example that we think would probably be relevant to a lot of first-time home buyers out there. So please consider these figures that you see now, put them into the calculator, and the results will show you from a mathematical standpoint why exactly it would be better to buy in this market versus rent. So to kind of go over the financial benefits here, the largest one to consider is that you are getting appreciation on an asset that you're also putting equity into, right? So there's a huge financial upside there. Not only that, but you're also not paying someone else's mortgage, right? I often am told, Max, I don't want to buy right now. Interest rates are too high. Well, if you're renting, your interest rate's 100%, right? So, and we go over this in previous videos that we've done. When you get a fixed rate mortgage, you're always in a position where once rates drop, you can potentially qualify for a refinance and lock into a lower rate. So that's another major financial upside. You're getting into most likely a fixed payment where you're not likely going to get priced out of your home. Whereas Max discussed, if you rent, you might get priced out of your home. So that adds that sense of stability he was talking about. That's really all we had to go over today. Thank you so much for joining us. Max, thank you for your time.
Absolutely.
And let us know if you have any questions.